mind, looking for a dime. James Locke in the house, gonna help you shine.
Welcome to the Poole Locke YouTube channel. I'm James Locke. Today we're going to answer some of the Ask James questions of the day. And the first question is from Barbara. And Barbara asks, how do I know if I'm investing for income? What can I look for on my statement specifically? All right, Barbara, we're going to dive into how you can assess if you're investing for income based on your investment statements, right? Looking at the statements, especially with the focus, as we always do, on reducing risk and volatility in retirement. Now, as we've discussed, the key to understanding whether you're investing for income lies in distinguishing between income and growth components within your portfolio. Now, income typically comes in the form of interest or dividends. Now, these are regular payments you receive from your investments. If you're looking at your brokerage account statement, one of the first things you should look for is the yield column. Now, not all brokerage statements have this, but if yours does, it'll show you the percentage of your income that you're receiving from your investments, right? So this yield percentage gives you a clear picture of how much income your portfolio is generating relative to the total value. Now, if your statement doesn't have a yield column, don't worry. You can usually find information about interest and dividends paid year to date, maybe on the first page of your statement. There's a summary section, maybe. This section details the actual dollar amounts of income received from your investments over the past year. Now, in contrast, the growth component of your portfolio reflects the increase in value of your investments over time. Now, this could be from capital appreciation, where the market value of your assets increases, or depreciation, where it decreases. So growth is essential for maintaining the purchasing power of your investments over the long term. But in retirement, the focus typically shifts towards generating a reliable income stream. Now, for those with 401k accounts, it's often a bit trickier because 401k statements typically don't break down income separately. However, you can still assess your overall portfolio performance and returns to understand how much of your gains are coming from income-producing assets versus growth-oriented ones. Now, if you're uncertain about how to interpret your investment statements, or if you're not seeing the information you need, reaching out to your financial advisor is always a good idea. Your advisor can provide insights into your portfolio's yield, help you understand your income versus growth balance, and ensure your investment strategy aligns with your retirement income goals. And remember, investing for income in retirement is about building a portfolio that provides steady and reliable cash flow while minimizing the impact of market volatility. By focusing on income-producing assets and understanding how to interpret your statements, you can make informed decisions that support your financial security throughout retirement. Great question. Thank you for that. Good question. As always, if you'd like to send in your question, you can do so by emailing any question you have to poollocke@poolelocke.com. All right, let's move along to our second question. Second question comes from John. John says, I'm not sure how much income I can get from my portfolio. Can you explain? All righty, John, great question here. So kind of same idea, dive a little deeper into understanding how much income can you expect from your portfolio in retirement? Always keeping reducing risk and volatility in mind. Now, as I mentioned before, the income you can generate from your portfolio largely depends on the current interest rate environment and the types of assets you hold. So just a little over 2 years ago, during a low interest rate period, maybe 3 years ago now, we were able to secure 4% net of investment fees for our clients. So for instance, if you had $1 million portfolio, that would equate to approximately $40,000 per year in income. Now, fast forward to today, we're looking at a different scenario with interest rates. Currently, you can expect to generate 5 to 6% net of fees from a reasonable portfolio. So this range reflects a balanced approach to income generation while managing risk. Now, can you aim for higher yields? Absolutely. There are, asset classes like business development companies, BDCs, or master limited partnerships, MLPs, where you might potentially achieve yields in the range of 8 to 12%. However, it's crucial to recognize that these assets they come along with higher risk levels. They can be more volatile, and the income they generate may fluctuate, potentially impacting your principal. So when considering income from your portfolio, it's essential to strike that balance between yield and risk tolerance. Opting for higher yielding assets may provide more income initially, but they also come with increased volatility and risk of capital loss. On the other hand, a diversified portfolio with a focus on quality income producing assets aims to provide a steady stream of income while preserving capital over the long run. Now, let's clarify something about CDs. Now, while you might find short-term CDs offering around 5%, now they're more like 4%, these rates typically apply to shorter durations. For retirement planning, where you're looking at long-term financial security, locking into longer-term assets with stable, predictable yields is more appropriate. This approach helps mitigate the impact of fluctuating interest rates over time. So bringing it all together, the income you can derive from your portfolio should align with your financial goals and risk tolerance. Aiming for a net yield of 5 to 6% from a diversified portfolio of income-generating assets is a reasonable target in today's market environment. By staying informed and understanding the dynamics of different asset classes, you can make informed decisions that support your financial well-being throughout retirement. Great questions today. As always, if you'd like to send in your questions, you can do so by emailing them to Poole Locke at poollocke.com. And if you like what you heard, go ahead and like and subscribe to our channel. I'm James Locke, your retirement income source. And I'll see you next time.
Money on my mind, looking for a dime. James Locke in the house, gonna help you shine. Retirement is near, don't you live in fear. Listen up, my friend, let me make it clear.